is I check my profile because I'm pretty sure we're live, but I never believe these things. I see both of us, so that means we are live. I did it again, and so did you, so thank you so much.
Let's do it, man.
Yeah, I'm very excited, and I'm really excited to have you here. You're such a wonderful person, and I know part of your self-identity that we've discussed before is happy. So I'm certainly so delighted to have such a happy guest. And we're going to continue the investor series.
Let's do it.
Yeah. So in the first investor series, we discussed the changes that are occurring in the world, right? And it's occurring with a lot of volatility. And part of that I think of as the bifurcation of the world. And that's part of my investment thesis is the world has never been cleaved in the way that it's being cleaved right now. So America retains its dominance. However, the other countries have lost some of their position, and that is being sucked up very efficiently by China. So we're not seeing as much of a gain from them as we're seeing weakness from the other countries, and that also means that those countries are now in a position that they have to choose allies. While as before, they could kind of mix and match their allies and just create something that kind of worked for them. Now everything is becoming an all or nothing. And I think we're seeing that in Europe. We're seeing that with recent Brexit. We're seeing that throughout the ASEAN countries. So it gives America new opportunities to come into new markets. It gives, in fact, China the same as well. And they've certainly done a lot with their Belt and Road, both the naval and the land part of it. And that creates new opportunities. So that was with Valina, and she was just wonderful. And she gave us a very good schematic, right? A system view of it. In the second series, we were joined by Tracy, and Tracy goes by Chigirl on Twitter. And we discussed sector rotations into energy. Because as America starts moving into these new markets, energy, of course, has to be a part of developing countries, right? They're not going to be good allies of us if there's not both sufficient trade, and there's not going to be sufficient trade unless they have energy, and they're not going to be able to downstream American manufacturing and warehousing and just kind of a supply chain without energy. So we discussed the fossil fuels there and what type of policy changes we can see or not expect beyond the rhetoric of everything else. What can we reasonably expect? And then the third one continued that within sector rotation into energy, which was nuclear, and that was with Mark Schneider. And we're in kind of a nuclear arms race of a different type, a more peaceful one, I think. However, it's one that creates new opportunities for both sides. And now what we're discussing, and I'm so delighted to be with such an authority and such a wonderful person to be that evangelist, is the markets as a whole. And then we're going to kind of go into Bitcoin, the conceptual framework of Bitcoin, and that's with a capital B. So I do want to share in advance of that. I do not hold any positions currently in Bitcoin. I had until several years ago. So I'm not in any way trying to represent or influence my own positions in any way. It's something that comes up when we discuss investments with people. It's now a financial instrument of some type or another, and that's what we're going to discuss. And then next week, we'll be discussing perhaps what might be Bitcoin's complement or alternative, and that's going to be with Luke Roman, and that's going to be about gold. Mm-hmm. And then from there, we'll kind of collapse back into the United States and talk about our own markets. And I'm extremely bullish on the U.S. market. I think everybody knows that. And I've tried to convey that as best as I could with people. Part of my investment thesis is that the world is being defragmented. And we were just discussing this right before. The world is being defragmented and it's being cartelized. So I've been very assertive in buying the cartels, and I've been wading very heavily into the cartels. And that is a good thing, but it also means that a lot of people won't be participating and the wealth distribution might narrow. So whatever the future is, we have to make sure that we're on the profitable side of it. So whatever the future is, we have to make sure we don't suffer it. And that brings us here. So I want to thank you so much again. And if you would be kind enough to introduce yourself, would that be all right?
For sure. Anthony Pompliano. I think everyone at this point just calls me Pomp. I've done a whole bunch of stuff. Let's see. Went to Bucknell University, got an economics degree, played football there, was in the military for a while, did a deployment overseas. When I got out, I was a sergeant in the infantry, built and sold 2 small software companies, then ran some product and growth teams at both Facebook and Snapchat, and then started investing full-time in 2016. About, I don't know, now we're over 100 early stage investments, kind of all over different industries. Most recently, a big focus on Bitcoin and crypto companies, but before that, kind of completely industry agnostic. So far, so good. I don't know. I'm just trying to learn and be happy. That's basically it.
I think you are certainly succeeding in your learning, and it's remarkable to watch in real time. And I think I can vouch for your happiness, because I watch a lot of your YouTubes, and they all have this happiness about them, and it's just really a delight to see your work effort is amazing, and your kind of own intellectual inquisitiveness that you express in all of your YouTubes.
I'm trying to keep up with you. You're live streaming on Twitter. I got to catch up with that.
Yeah, and it's really good. And we were discussing that a little bit before. I'm a fan of Twitter. I think it really works, and I think it's a place where so many people can connect. And I think this live format also gives us kind of some regained intimacy. You and I had the pleasure of having, perhaps it was a coffee or a lunch, might have been a lunch, and might have been a coffee actually. And we spent a good deal of time just kind of talking. And of course, you're always a natural interviewer, so you probably lured me into talking a lot about myself. And so here, this is kind of like a follow-up to that, and hopefully everyone will enjoy, what cometh forth. So
let's do it.
Yeah. So I want to get into kind of my own view, and then we'll discuss your own. And I'll leave my view very, very short, as I think I've already kind of expressed it a lot. And that is that I'm a futurist, right? And was as a kid, and I kind of saw my career path, and worked out pretty much on schedule. But I've always been a futurist, and I went to Wall Street very, very early, and I have applied myself to the financial instruments that have been available to me, which have been extraordinary. And now we're moving into new things. So I'm also, with the audience, also looking at, is now a time to be a participant, and also trying to get a conceptual framework for what is Bitcoin. So could you help better inform that, and give me a sense of what is Bitcoin with a capital B?
Yeah, well, I think the best way to kind of think through this is just, you got to understand 2 key pieces, right? One is how the financial system works, and then 2, what is money? And really, from a money standpoint, historically, it's just been a belief system, right? Whether it was a physical commodity or not, it's just you and I, as 2 market participants, exchange a currency as or in exchange for a good or a service. And the reason why we do that is because we both believe that currency has value, right? And so that's been everything from gold to seashells to pieces of paper, all kinds of different things. And I think that the first key piece to understand about Bitcoin is just another currency. Right. It's just in a digital format. Now, the question is, great if anything can be a currency, literally, if you and I can trade marbles, then the question is really like, well, what makes a good one? Right. And I think this is really the difference between kind of money and currency, right? Currency is just anything that can be traded for a good or a service, but money actually has some intrinsic value to it, and has some advantages. And when it comes to Bitcoin, what it really is doing is it's got 3 key properties, in my opinion. The first is that it is decentralized, right? So every other kind of nation state currency in the world today is controlled by a central bank or by a government. So they created it, they issue it, they control it, they own it, and that is theirs. And so when it comes to kind of assets outside of the system, it's really precious metals and Bitcoin, right, are kind of the two options. The second thing is that the monetary policy, as we have seen on great display over the last 6 months, the monetary policy for nation state currencies are very kind of emotionally driven, very reactive, and they're driven by human decision making. Sometimes that human decision making can be fantastic. Other times it is horrendous, right? And you kind of can go around the world, and the problem is that we always know with hindsight bias or kind of clarity when there was good decisions made and bad ones. But in the moment, they're kind of heavily debated. Right. And so you could look and say there was people who thought the situation in Lebanon recently, the decisions being made were positive. Well, the outcome may tell us maybe those weren't the best decisions, right? Or Venezuela or Zimbabwe, et cetera. But also there's plenty of times where people disagree with central bank decisions in the moment, and they end up being okay or good decisions, right? So I think it's just humans are making the decisions with the data that they have. With Bitcoin, it is a programmable and kind of a preset monetary policy. So literally it's software code, it's pre-written. It will not change unless 51% or more of people agree to change it. And so the beauty of that is that you don't kind of speculate on what's the next interest rate decision, or is there more QE coming or not. You pretty much know this is what the monetary policy is for the foreseeable future, and you can go in and actually read the code to understand that. So that's kind of step two. And then the third thing is what I call the structure. So every fiat currency in the world is inflationary, meaning that there is a incentive for those who control it to print more of it, right? And basically what they're doing is they're trying to create economic growth. You can create economic growth through two ways. You can either take money via taxes from the population, and then you have income and you can spend it to try to create growth, or you can basically take money or value from those holding the currency by taking their purchasing power. Right. So you create more money and kind of lower the purchasing power of everyone, but you then have the ability to create economic growth. And so that's kind of the inflationary system. In this deflationary system, it's the exact opposite. So what you actually end up doing is, rather than constantly taking value or purchasing power, you're adding it. And that's because there's a fixed supply. There's these like disinflationary monetary supply schedules, all these details we can get into. But I think the three key pieces are, Bitcoin is a decentralized currency compared to the centralized currencies. Two is that the monetary policy is programmatic and transparent versus human-led decision-making in the traditional world. And the third is inflationary versus deflationary. And so, I kind of sum it all up and say, sitting down and drawing a line down a piece of paper and writing, here's the difference between Bitcoin and, let's say, fiat currencies is really easy, right? To kind of identify all the differences. The big question and where a market gets made is just which one is going to be better, right? And it doesn't have to be a zero-sum game. Both could thrive and survive. But I think people basically are speculating on what the future looks like, right? So to your point about kind of, futurist, understanding kind of what the odds are and the probabilities is where the markets are getting made. And so, people are choosing what they think that world looks like. And the nice thing is that your opinion, my opinion, and most other people's opinion doesn't matter, because the market's ultimately going to decide who the winner is, right?
Yeah, that's very interesting, because let me go back to the decision making, because I want to go back to the market place for it. But but Bitcoin participants and evangelists like yourself, and evangelists that are also participants, you can't possibly base your decisions on knowledge alone. And that, but what I mean by that is you have to anticipate the future, right? And the future is contingent upon those decisions that you were discussing that people have not yet made. So you don't know what those decisions are going to be. And the consequences of those decisions can't really be accurately anticipated. So
that's every asset, though, right?
It is. So it's an abstract argument, and is can we have perfect knowledge? And it seems that everybody within it has imperfect knowledge. And your point is well made. And so I'm asking, does the market ever converge around the view of Bitcoin as a durable currency? And do we move on past that laboratory? And the record of it so far is convenience, right? There's a speculation quality to it. And its pricing history is still very, very brief. And there's a novelty feature of it, beyond some other implications that it has, where it has been used for money laundering, and there's a portability to it and a condensation of its value. But so do we move beyond the convenience and speculation and novelty of it? And does the market converge around that view?
Yeah. So one of the interesting pieces, and I think this is actually why most Bitcoiners or people who are interested and intrigued by this end up spending so much time on it, is because in many assets, the evaluation that you would make, so take a stock, for example, what you're essentially trying to figure out is, the value that I'm purchasing this asset at today, is that going to be, in some way an arbitrage opportunity on the future value based on, I don't want to say consensus driven metrics, but for the most part, people, they look at cash flow, they look at PE ratios, they look at, market dynamics, addressable markets, all that kind of stuff. With Bitcoin, what you end up having to do is you have to make a little bit more of a 3D analysis, which one is great from an intellectual stimulation standpoint, but two, obviously decreases the probability that you are going to be accurate in very specific predictions, right? And what I mean by that is take just what is success when it comes to Bitcoin, right? Some people would say it not disappearing would be success, right? Just the fact that an asset got created out of nowhere and it ended up not dying ever would be success. Okay, that's one argument. Another argument could be kind of the store of value. So this is a digital, equivalent or a colleague, if you will, of like a gold, right? So gold's an analog store of value. Bitcoin becomes a digital one, and that's success. That's kind of the milestone that's important. There's other people that would argue, no, it needs to become a medium of exchange, right? So people need to use this as a true currency and be able to do kind of all the things that you can do with dollars or maybe even credit that you can in the traditional system today, right? And then there's even other people who go a step further and say, no, being a currency alone, just as a currency is not good enough. The success, kind of finish line, if you will, is it has to become the global reserve currency, right? And then we can declare success. Now, everyone's probably got a hint of truth in their argument, right? Because in order for the global reserve currency people to be correct, well, it's got to survive. It's got to be a store of value. It's got to serve as a currency. And then it gets to be the global reserve currency, right? So kind of the farther up you go in the success ladder, if you will, you have to accomplish those other steps. The question becomes, does it need to be one thing to everybody, or are there assets that essentially serve different functions for different people, right? So gold is a good example where at a point in time, right, maybe not necessarily today, but as a point in time, it served both as a store of value and as a medium of exchange, right? There was people, that's how you bought things, was you used gold. Now, the use case of gold as a medium of exchange has drastically reduced because there's better technologies, new things that have come up, obviously the breaking of the gold standard, all that kind of stuff. And so I think that Bitcoin is like the classic technology asset in the sense of, I think a lot of finance minded folks, they like to look at something as a snapshot today, right? I'm buying the asset today. What am I buying? What price am I paying? What is the future value of this going to be? And is it going to go up or down? And if you're in it for pure financial benefit, then that's probably a pretty fair way to look at any asset. Like you almost don't care what the asset is. When it comes, though, to more of a technologist view, you almost understand that the asset is going to evolve over time, right? So there's this trajectory of it can be very speculative and it can be used by the fringes of society, right? Pretty much every technology starts there. So, beepers and cell phones are used by drug dealers first because they're a way for them to skirt the law, right?
And doctors.
And doctor, yeah, of course, right? But like just the fringes of society are always near the front of technology adoption because they're constantly playing a cat and mouse game with law enforcement. And so Bitcoin was no different, right? Obviously, it was used for nefarious things. But as you start to go through that maturation process, now you've got everyone from, the OCC saying, hey, banks can hold it. You've got Fidelity setting up businesses. You've got, the Paul Tudor Jones, like kind of all that stuff. But also what I find interesting, and I don't yet have a framework to think through this, is in some weird way, the percentage of nefarious use cases for Bitcoin or as like a percent of transaction volumes continues to trend downwards. And it's probably not because there's less criminals in the world. It's probably just because there's more and more non-nefarious transactions happening. Right. So the kind of.
Yeah. There's also more of the node. Oh, I'm sorry. There was a little bit of a lag. There's also more observation ongoing of the nodes. It's just more people sitting on that. And I don't want to, again, bring in too much complexity to it. May I ask that when you compared it to kind of the equities, and I'm going to leave the science out of it, and I think I'm fascinated by the science, but I'm even more fascinated by money, right? Because my bank accepts that.
They do.
Yeah, and I'm always looking at sector rotations, and again, going back into my investment thesis, things are clearly changing. And I appreciate the anti-stasis, I suppose it is, kind of element of Bitcoin. And again, that's with a capital B. So that's that whole kind of conceptual framework of it, rather than just that one precise thing, right? And I would say that Bitcoin has really been an excellent laboratory, but now it does compete with equities. And those equities is what I, kind of do all day. And those equities have data. It's well recorded. It's certainly well preserved, and it's widely accessible. So it also has that kind of understandable analysis. While as right now within Bitcoin and the cryptos, there's really an asymmetry of information, and that makes it hard for a new entrant to decide when to buy or if they should buy, right? Because it's kind of like entering a movie, a science fiction movie, in the middle. You've missed everything, and now I'm kind of in the thick of the plot. So a person coming in, and I see it's moved with the market somewhat. So there's been a reduction in its volatility, and it does kind of reflect the commodities in the markets. And I definitely want to discuss that. But a person coming in today or at any other day has little insight as to whether their point of entry is someplace within a positive self-reinforcing loop. Are they coming in at a place where it's really been mispriced?
Yeah. Well, and you're talking about Bitcoin or equities?
I'm talking about Bitcoin. I'm really talking about cryptos and about, again, Bitcoin and with a capital B. And if you want to kind of distinguish for the viewers that might not be familiar with the differences are between how it's referenced.
Yeah. So, one of the most confusing parts about Bitcoin is the nomenclature used is Bitcoin, the network, with a capital B. Bitcoin, the network, is very similar to any payment processing network in the sense of it processes payments, right? So this is the ability to put transactions in a very unique way and allow them to be processed so that any two parties can transact. So that's kind of Bitcoin with a capital B. Bitcoin with a lowercase b is the actual asset itself that you hold. So compare this to dollars or gold or something like that. In terms of this asset, one of the interesting things is if I want to buy Facebook's search or Facebook's friend graph, or I want to buy Google's search engine, or I want to buy Amazon's AWS business, I can't just buy those individual product lines, right? Or those individual features. I have to buy equity in the company that owns the intellectual property or the cash flow or whatever it is. Well, if I want to buy Bitcoin, the payment processing network, there is no company. It's decentralized. And so what I've got to do is the only way to get financial exposure is to own Bitcoin, the lowercase b, right? So you can own the lowercase b Bitcoin for everything from, hey, I think it's digital gold, to I want to have financial exposure to the Bitcoin processing network, et cetera. Now, when it comes to price, the two things that I always tell people are there is, obviously there's a big difference between price and value. And so the fundamentals of something like the Bitcoin network look very, very different than a traditional corporation, right? Obviously, because it is different. And so the things that I pay attention to there are kind of healthy transaction volume, right? So if you look at on-chain adjusted transaction volume last year, this is taking out all the exchanges and kind of all the nonsense and trying to really get at how many people are using this on a daily, weekly, monthly basis. There was more on-chain transaction volume for Bitcoin than the transaction volume for PayPal, Apple Pay, or Venmo last year, right?
Yeah,
And
yeah.
so start to break that down, you can go kind of data point by data point. And what you realize is the value, right, in terms of these fundamentals has never looked better. It's the price that is very, very volatile. And I think that's where people, they watch this price and literally can go up or down 10% in a day.
Yeah.
Right. And they're just not used to that.
And that brings up an interesting point, because to observers, and I'm one of them, there does appear to be somewhat of kind of Bitcoin mining as alchemy, right? As a modern day alchemy. And, we saw, I watched it. I sold, I guess, around 3,000 a long time ago. And that was the last of it. And that was really, I thought that it might continue to go up because there was that self-reinforcing loop. But that also kind of introduces kind of asymmetrical bubbles, right? I'm still a finance guy, and I try and think of efficient markets as much as I can. So it went up to 20,000, and there just seemed to be a trend, and also there was a misconception related to that trend, and that continued that loop, and then it got to 20,000, and then it fell very, very quickly. So do you think of 20,000 or thereabouts? I don't know what the exact prints on it were, but thereabouts. The only time I saw it is when I said, well, I don't own it anymore. Now it's at 20,000. So I could have been off by 1,000. But do you feel that 20,000 was, the twilight, that was the climax of it? Or now do you see that laboratory and that the marketplace has introduced new efficiencies and new technologies that can allow that to resume without requiring as much marketing and promotion as it did the first time around?
Yeah. So price is determined by supply and demand, right? So this is true of every asset. The one thing that is unique about Bitcoin is the supply is programmatic, right? So whereas a stock, we've seen in recent days, Tesla does a stock split, which people will argue does or doesn't have any change to the volume, right? But obviously the demand changes based on certain things that change with supply that are unexpected, a year ago. With Bitcoin, we know exactly what's going to happen from a supply standpoint. So for those that are unfamiliar, basically in the beginning, in 2009, 50 Bitcoin were distributed every 10 minutes. That went on for 4 years. It then got cut in half to 25, went on for 4 years, then got cut in half again to 12 and a half, 4 years. And then just recently in May of this year, it got cut from 12 and a half to 6.25. So about 900 Bitcoin a day are created, or exactly 900. And so the reason why I bring that up is because every time one of these, what they call the halving, or the daily incoming supply, gets cut by 50%, there is a supply shock to the system, right? So if demand stays constant and you have a supply shock like this, then the idea would be that the exchange value, right, or the price would go up. The question is always just how much does it have to go up, right? And you've got a variable in the demand side of the equation. Now, in 2017, as you mentioned, it went from $1,000 at the beginning of the year to $20,000 at the end of the year. Incredible, 20x, a single year. But it's somewhat misleading in that it actually went from $10,000 to $20,000 in 18 days. So really kind of throughout the whole year, it got from 1,000 to 10,000. So it's still 10x, right? Still big movement, but not quite 20x. And then in 10 days, it went from 10 to 20. It was there for, I think, 48 hours maximum, right? Kind of a short period of time, and it crashed back down. So the way that I think about it is a better kind of true price measurement is to look at something like the 200-day moving average, right? And the 200-day moving average has continued to go up kind of year after year after year after year. The daily price goes through these kind of booms and bust cycles, right? So the part that you didn't mention that tends to be very scary for people is after it hit 20,000 in 2017, it then crashed over a year until it hit $3,200. Right?
Yeah. So, but that brings up such another, vital question for me. And I'm not an efficient markets person, right? So I definitely recognize that there's a lot of dynamic opportunities in mispricings and within trends. But how can a government or regulators intervene to halt those or slow down the boom or bust cycles?
Well, I think part of it is, I forget the exact days, but I think it was like the day that Bitcoin hit 20,000, the next day shorting was introduced into the market in terms of kind of futures and derivatives type stuff. I think it was CBOE, if I remember correctly, or may have been CME. And so when that occurred, prior to that occurring, it was a long only market. So of course you get all kinds of crazy price speculation because you basically don't have the opposite force available, right? So now that got introduced. But the second thing is that Bitcoin also is a 24/7, 365 day market. So unlike the stock market, which is open for 5 days a week, certain hours of operations, and they kind of pack all of the demand into those time periods and really concentrate volumes, here it trades at all hours of the day, every single day of the year. And so what you end up getting is you get something that looks a lot more like a free market, right? In terms of there's no limit up or limit down triggers. There's no halting of the price. There's no hours of operations, all that kind of stuff. Where I think that they're going to kind of have to migrate to is actually the regulators aren't going to be able to control price. What they're going to have to understand is like, as of today, unless something changes, but given the ingredients we have today, it is one of the last standing, quote unquote, free markets. Now, people will claim it's manipulated, all that stuff, but just from a structural standpoint, it has a lot of advantages when you look at it through the free market perspective than kind of other assets.
Well, what happens when those regulators, and they have to come in at a certain point, but what happens when they have the same fallibility as the market participants? I mean, behind the invisible hand of the markets that you described, there is the very visible hand also of politics. So, we're certainly in the midst of a trend right now where we've seen it gone up. We've seen it go up, and it's been certainly an adequate substitute for a lot of people for buying into particular stocks, Facebook or whatever it is. And those trends do tend to validate themselves, and that can kind of defeat a rational market, which makes a lot of sense. But there's always a point when you don't want to be a trend follower. So that also presents a problem of at what price. And I'm certainly not trying to be persuasive of anybody buying in because I don't know what I'm doing. But there is a certain point when you just don't want to be a trend follower, and that it has moved up. So again, what happens when the regulators have the same fallibility as the market participants, and what happens next with it? My question, I suppose, is really, can Bitcoin suffer its own kind of epidemiological, whatever that word is that I hear so much, epidemiological, whatever. What happens? Can Bitcoin suffer its own epidemiological consequences?
Yeah, so I think if you start to really think about kind of the psychology of markets, and again, this is all like I'm almost thinking out loud to some degree because I don't think that anyone actually has answers here. This is more just kind of data points. Price is a incredible incentive, right? For good and for bad. And so price leads to greed. Price leads to attention, right? It's kind of like if you've ever had a treat and your dog is sitting there and you want the dog's eyes to go somewhere. What do? You move the treat, right? And the dog's head moves, almost identical to wherever the treat goes. I think price is similar in that when price goes down a lot, people kind of walk away, right? When price goes up really fast for an asset, everyone starts paying attention and kind of piling in, right? It's just that is the psychology of markets. And so
that's also what happens with a positive, feedback, which is again kind of that convergence that we've seen between the trend and it is self-reinforcing, right? But it can't go on forever because eventually those participants within the market who've been buying it, and many of them were just buying it for speculation and hoping to sell it at this and sell it at that without really much kind of rational reason to it. But eventually those participants, and perhaps it was at 20,000 at its twilight or at its climax, but they seem to have moved so much ahead of themselves that they really weren't kind of objectively into reality. And then we saw it crash down.
Here's the framework that I use to think about this. Again, may not be accurate, but at least it's how I kind of rationalize it in my head, which is take a mobile app, right? If I had a mobile app company, we've got a product, and I wanted to get new users, what I would do is I would run a marketing campaign, and I would get a bunch of people to come in and try out the app, right? Let's say it was a paid app that had kind of a free trial type period, right? So a Netflix or something like that. A bunch of new users come in and they try the free trial. And it makes my numbers look amazing because all these people just signed up, right? Well, when the free trial ends, let's say 50% of them leave and they don't convert, but 50% do, right? So then now that number crashes, but there's a net gain of, let's call 50 users, right? So I brought in 100 through the marketing campaign, 50 stayed and 50 left. Well, when I go to run another marketing campaign, all of a sudden now I sign up 200 people. 50% leave and 50% stay. So now I have 100. So I take the first one, net gain of 50, second one, net gain of 100. Now I've got a net gain of 150 over the first two marketing campaigns. That's pretty much what's happened with Bitcoin, which is there's these kind of market cycles of the boom part where a bunch of people come in, they're speculating on price, they're piling in, it's all the psychology stuff. And at some point that gets exhausted, right? There's just not enough people to keep coming in the market to keep kind of driving it forward, to your point. When it crashes, though, some portion of people leave, right? And usually a good portion of people leave, but there's still a net gain from the last market cycle. And so kind of you get this like higher lows phenomena. Now, that is a healthy sign in terms of the higher lows, where I think that there's a lot of cognitive dissonance for investors is, that all sounds great, but it still went from 1,000 to 20,000 back down to 3,200 in a 24-month period. So that type of volatility is really scary to people. And then when you kind of put on top of that the idea that in 2017, when it went from 1,000 to 20,000, if you took the 9 best days of upwards price movement out of the market, Bitcoin was actually flat to down that year.
Yeah, interesting.
So you start getting in this world of like, this isn't so much a stock-like asset. This is very much a technology type asset. And so you can imagine, pick your favorite technology company. If you had a daily ticker price on that asset from the day it was started to where it is today, Facebook, Amazon, Uber, just go down the line. Every single one of them, they would be so volatile, right? I mean, imagine Amazon stock, in 1995 before it was actually public. Jeff gets a phone call from somebody, stock price goes up, right? Now, all of a sudden, a contractor pulls out. Okay, now price crashes. Like it's just entrepreneurship, right? It's just company building. And so I think that's kind of what we're seeing happen with Bitcoin. It's just, there's been a ticker price every single day since the start. And so it's just hyper volatile. And if people don't have the stomach for it, they should avoid it, right?
Yeah. So I want to kind of connect, and then I want to take a lot of questions, right? And thank you, everybody. But I just want to make a quick connection, and then we're going to do a bullet, and then we're going to do I keep on thinking it was a bullet round. I don't know. I take a speed round, like a game show. But so in the currency markets, where it's been kind of compared to, or there is some perhaps rhetoric or people perhaps thinking, ahead to what happens next. And I would agree with it somewhat that I do think we're going to see a Fed coin. I think a Fed coin dollars in, Fed coin out is certainly possible. I think that allows kind of alternate, the secondary and tertiary coins to compete for fiscal policy. So I can see that happening, but I'm not sure if that's still money yet, or if that's what I think of as, and I know we have described it as such, so I certainly don't want to be offensive with it, but as poor people's money, while as rich people would have gold buried in their backyard, and gold's got no memory and cash has no memory, Bitcoin does. But in the currency markets, the upside and downside are symmetrical, right? They move in multi-year waves. You can't have a lot of volatility within them. So at some point, doesn't one defeat the other? And I know that's a hard question. It's a long question. At the same time, we've got so many people here, so I'm so excited about their questions also.
Yeah, I think the short answer is nobody knows, right? And the other piece of this equation that is really important that always gets left out is your goals and what you're optimizing for is probably different than my goals and what I'm optimizing for, which is different than everyone else watching this, right? And so a lot of kind of what can occur is based on our perspective, right? So I always give the extreme example of like, take an 18-year-old kid who has limited resources, just starting out in their career, and they're very much in the wealth building mode, and compare them to somebody who's 75 and is very much in wealth preservation mode, right? Has a lot of resources and is thinking more about how do I keep the assets I have for the next generation. Those two people can look at the same asset and come away with drastically different conclusions on it, right? And Bitcoin would be a great example. The 18-year-old is probably super excited about it, right? And the 75-year-old is probably like, this is absolutely insane because tomorrow it could be worth 20% less.
So for the 18-year-old, is it now their money? And are we kind of are we aging out? And again, these are such tough questions, but I'm very curious about it. I'm old. I'm kind of, if I had hair, I would be what's called a gray hair, right? So I'm very curious.
I think that it comes down to I talked to somebody yesterday, right? And we were talking about gold and Bitcoin. And what I explained to them was I said, if you take gold bugs, kind of people who really believe in gold, and you take Bitcoiners, you put them in a room and they both start out on kind of their view of the world. They will agree on like 99 to 100% of how the system works, all the problems, why they don't like the Fed, all this stuff. They'll agree almost to a T on all of that. They will also agree that the solution resides with sound money principles, right? So this idea of less inflation and quantitative easing based world, but a sound money based system. Where they will disagree is the gold bugs will say, oh, I believe that the application of sound money principles in an analog form, which is gold, is the solution. And the Bitcoiners will say, I believe that an application of sound money principles in a digital form is the solution, which is Bitcoin. They're probably both right. They're both sound money principles, right? It's just varying degrees of quote unquote success, right? Yeah. And so naturally you get a group of people under the age of, I don't know, draw the line at 40 years old. Those people just tend to be more digitally native, right? Than the people who are over the age of 40. But they're both still optimizing for the same kind of structure of the asset or the same properties. It's just how they want to express that in their portfolio. One's digital and one's not.
Gotcha. Thank you. And I'm so appreciative that you can take complex questions and reduce them to such kind of useful and answerable simplicity, because I can kind of get lost in the intricacies of such things. So I want to have a chance to say hello to people here. And so Guy Mish, thank you so much for joining us here. And Mr. Alex Ander, thank you again so much for being here. And Mustango, thank you so much. You're so thoughtful for being here. So I see some really good questions. And now we're going to, and Anand, again, thank you so much for being here. And Janan has such a good question, and it kind of moves us along. So because it's been 43 minutes now, and we're aiming for an hour, hopefully we won't go too much over, but these are going to be kind of speed rounds. You feel good about that?
Let's do it. Let's do it.
It's exciting, right? We've seen, and Janan Glasgow asked, we've seen states regulate access to wallets. Thoughts?
I think that what states can do is they can attack all different stages of the tech stack, right? So they can go after centralized servers, they can go after wallet providers, they can go after exchanges, they can even go after ownership, right? So, I mean, there's still nation states that could just ban ownership of a specific asset. US did it with gold back in the day. And so I think that what we are going to ultimately end up with is states are going to compete for citizens And so some states are going to be super friendly to this stuff. Some are not. I personally believe, my personal view, history will be kind to those who embrace this rather than those who fight it. But again, that's my view, and we'll see. Specifically around wallets, I think we're at a point now where people are realizing it's going to be really hard to regulate both digital and hardware wallets. So you kind of have an analog version that will be very, very difficult for them to regulate. But I never wish for them to want any more regulation. So we'll leave it at that.
Yeah, but regulation kind of resolves kind of the human uncertainty. So there is some good features to it, I hope. And this is more just a commentary. So Tim, thank you so much for being here. Adam is one of the first few who urged us to buy at the March lows. And that's true. I wish Boeing was up a little bit more though, but I'm so happy to see Facebook and Tesla and just kind of the cartels. These are the companies, and we were discussing this a little bit before, and I'm going to call you Pomp too. We were discussing this a little bit before that, the cartels have won. It's some part of that is perhaps the COVID environment. It's what I call the fastest roll-up of power in history. So I do want to buy the roller uppers, right? So Nabil, thank you so much for being here, and hello from Dubai. So thank you so much for being here. And I'm going to skip through because we have so many good questions. And this goes, and again, it's from Tim, so thank you very much. Tim asked, does Bitcoin really need to be regulated like national currency to really become mainstream?
Yeah, I think that short answer, no, right? And what I mean by that is the difference between a currency and money is money tends to be outside the system, right? So gold is money, whereas currencies tend to be created, issued, and governed by nation states. Now, that is a somewhat blurry line when it comes to regulation. Obviously, there's regulation on the gold market. There was confiscation and kind of outlawing of ownership of gold in the past. What I do think is happening, though, and one of the key inflection points will be when nation states begin to accept Bitcoin as a currency for various activities. So paying taxes would be a big one. But if you look at, again, kind of on the fringes, those that adopt things first, like Venezuela, for example, is now accepting Bitcoin for various government services, right? And so that doesn't necessarily...
They have to. They really have to. I mean, it's such a collapsed economy, and so much of the elites have used it's crypto, it's digital to, or let me, discern it, it's crypto to launder money. And it was a real problem. You couldn't sell the oil into the market, but I'm going to skip along. Would that be all right?
Okay, let's go.
Okay, because it's the speed round. And I'm that dude, and thank you so much for being here. Ask, is Bitcoin correlated to the markets? Because it sure seems it is.
Over a long period of time, no. It's got about a 0.15 correlation to other assets. In the last couple of months, during this liquidity crisis or highly deflationary period, all assets trend towards a correlation of one. So everything kind of moves in lockstep. And the best example is go back to 2008, gold, equities, everything, correlations go towards one. And then once you kind of get out of the deflationary or liquidity crisis type time period, then you'll kind of get back to the normal correlation levels. And so historically, what we've seen with Bitcoin is that it has not been correlated, but definitely over the last couple of months, there's a correlation due to that deflationary environment.
And Party Through It USA, and thank you so much for being here also, ask, will the volatility continue, and does it make it difficult for trade deals between countries?
The volatility will definitely continue, I believe. Now, if you look, actually, the volatility has come down. So during these bear markets, volatility drastically reduces, and volatility goes up in kind of the bull markets. Obviously, you need volatility for price to go up as well. In terms of making it difficult for trade deals, right now, I think that a lot of the countries who have tried this, and I say a lot, I think there's only been like 3 or 4, they're quite small trades. So, we're talking about tens of thousands of dollars for a nation state. That's like nothing. But what I do think will continue to occur is the nation states that adopt it first are going to use it for, they don't care about the stability of it as much as the censorship resistance and that stuff, right? Those value propositions are more important than the stability of price. And over time, as Bitcoin becomes less and less volatile, then more and more people will adopt it because it has stable price as well.
Thank you very much. And the emissary, and also thank you so much for being here, ask, do you see governments fighting Bitcoin as a currency or even a US dollar versus Bitcoin scenario? And I'm going to answer that in part. right?
Okay, go ahead.
I don't see anything displacing the dollar. I really don't. I think
Ever?
no, there's just too much. There's too many dollars in the world's banks. And that's, I could go into this in quite some depth, but you're seeing the euro trade only within the euro for the most part, and sometimes it's used as a mechanism to defeat certain regulations.
Do you think we'll see high levels of inflation?
I don't know, because it depends on how you measure inflation. I mean, I have this argument a lot. Is when I bought my first house, I was paying 9%. I couldn't Airbnb my house. My car was horrible. Gas, cars were horrible. It would always hit potholes. So I couldn't extract a lot of value from my house. Right now you can. You can Airbnb things, and it's just I don't think GDP and other of these the tools that are being used really reflect kind of the real world. I think they really do have to kind of recalibrate. So inflation, it depends upon the goods you're seeing. In housing inventory, you can buy some great houses today. You can buy a couple of really good houses today for just so cheap, and the developers are just building some really beautiful things. So there's just kind of there's an elegance to it that we didn't have. So no, I do not see anything displacing the dollar. One of the good things, I suppose, of having a huge trade deficit is that our dollars are in every bank, every place. And I don't think China, despite its rhetoric that finds an audience, a gleeful audience, I don't think it desires to displace the dollar, because then it's got to play by the rules, and it's really enjoyed not having that constraint. So, but I want you to answer the question now, because I could be wrong.
Well, in terms of governments fighting Bitcoin, for sure there will be some governments that choose to do that. I think that will be a misstep because there will be many countries that choose to embrace it. One of the beauties in the United States, for example, is there's a lot of congressmen who literally on the congressional floor or through social media, public, comments, etc., have really taken a liking to Bitcoin, and so that's an interesting kind of development. But there are also plenty who don't like it, right? So kind of you get naturally some disagreement in politics. When it comes to the inflation stuff, I actually take it a step further, because I think you're right in if you subset or kind of divide the population into 5 buckets, right? So you get the top 25% of people, that kind of the next one all the way down to the bottom 20%. The bottom probably 40% of a population are going to see incredible levels of inflation. The top 40% are going to see almost no inflation, right? Like if you look at the CPI metrics for coming out of 0809, I don't think we ever got over 2% for a while, right? Like it was like 1 to 1.5.
But you can offset, and I apologize for it.
No, go ahead.
It's such a point. I'm so happy to intrude upon your.
That's why I'm here. Let's do it.
Yeah, but you can kind of interrupt that inflation cycle in a way that the Fed could never probably stop. And that is, you can have an Amazon coin if your landlord takes an Amazon coin, if your supermarket takes a supermarket coin. Clearly we're seeing a trend towards massive company towns, Google company town and such, where they can have their own kind of script note. And that is in its own way kind of the same Chinese tool of Chinese employed tool of having a dual currency, and one that kind of exists in the real world, and one that doesn't. So I think that there are ways to
why do all that when you could just use Bitcoin?
Okay. Well, you make an interesting point. So I see Valina is here, and I only see a question mark. So that's such an open question. So I don't know how to answer that. But to say you're right. Okay, good question.
That's the best question.
It is. And Valina, if you could expand on that, it'd be so appreciative. And Valina participated in the first investor round, investor series, and she's really just, I'm such a fan of hers. And somebody asked up here, and let me actually go backwards a little bit, because I was talking about the bifurcation of the world. I'd have to find it, but they were asking if it would be kind of a replica of USSR, kind of back in their heyday. And I'm really not qualified to answer that question. Valina really is. This is what she does, and she's just such a kind of a plumber of the system. It's really remarkable. So Gary is here, and thank you so much for being here, Gary. And they ask, Gary, that is Gary Faulkner, how would you assess the viability of the Bitcoin ATMs as a long-term delivery channel?
Yeah, I tend to think it's geography specific. So I do not see those being a very viable solution in the United States. There's some portion of the population, sure, that might use it, but I just don't see it being like a nationally scalable strategy to build a really, really big business. But if you go to South America, if you go to countries in Africa, maybe places even in the southeast of Asia, in those places, I actually think that it is very, very viable. And so it has a lot to do with internet infrastructure. It has to do with just consumer trends and behavior, even demographics, hardware ownership, right? Do they own smartphones? Do they not? What are those smartphones operating systems? All that kind of stuff. So that's kind of how I'd break that down.
Okay, we're in a speed round now. We're in a speed round. Yeah. Okay, so Carlos, and thank you so much for being here. They ask, how will quantum computing affect security and bit mining operations?
I do not think quantum computing is as big of a threat as some people like to make it to be. Two reasons. One, if I had a quantum computer, I would get no financial benefit from hacking the Bitcoin system, because the second that the system was hacked, which it would be transparently known, the value of Bitcoin would drastically tank, right? So if I acquired a bunch of Bitcoins, let's say I went and I took all the Bitcoins that hadn't been mined yet, so about 2.5 million Bitcoins. Well, if they're worthless, then I'm just holding a bunch of ones and zeros that don't really matter, right? And so I think that there's kind of this game theory there. The second thing is, I always tell people, Bitcoin is a $200 billion asset, $250 billion asset. If you had a quantum computer, do you think that the first thing you do is hack the Bitcoin network or go do something else? Right. And there's probably way worse things that you could go do, or way more profitable things that you could go do. And so I think that the quantum computing, one, we're far away from it, but also two, is just not nearly a threat as people want to make it out to be.
Yeah, thank you very much. And Valina asks another question. That's her. Is that awesome? And for those who can't see it, Valina just tweeted or added to Periscope. She said another Q, and that's about it. So, Valina, thank you. Good question. Please expand on that. It would be awesome. I'm so eager to hear your questions. So, Prath Godball and Godball, and thank you so much for being here. Ask, isn't the irreversibility of transactions a downside? Can't reverse fraud or forced transfer?
Yeah. So part of this is that's actually the advantage here, right? Is if you kind of, again, put a line down a piece of paper with all of the times where irreversibility is a positive versus a negative, the positives drastically outweigh the negatives. So, I think it's Scott Adams always says, of course there are edge cases or, kind of outlier type situations where somebody could say, yeah, but in this one case, wouldn't it be better to X? But in the majority of cases, irreversibility and kind of this ledger system that Bitcoin has is a net positive versus any sort of negative.
And Ram Crypto asks, and thank you also for being here. Irreversible transactions are what allow you to fully be your own bank, no centralized institutions.
Exactly. Ryan should be doing this. He nailed it.
Okay, yeah, that's awesome. And uninformed opinion, again, returning back to quantum computing, which I'm also involved in within my investments in India. Quantum, although it's different, it's quantum teleportation, it's communications, really exciting stuff. So quantum would be a risk to current signature scheme, but there is quantum proofs, and that will require a hard fork. So without getting lost in the intricacies of that thing, of that question, could you just give a really quick response to that?
There would have to be a material change to Bitcoin in order for it to be susceptible to quantum computing.
Wow, that was quicker than I expected. Okay, and Rameni, thank you so much for being here. Says being your own bank is like being your own baker.
Banker, maybe? Banker?
Oh, yeah. They said baker, and I just kind of...
Yeah. I'm assuming that he means banker. But yeah, it basically is just this idea that... and again, this all goes, every single thing we're talking about today goes back to financial education and the lack of financial education in the United States. But people don't understand how the banking system works, how money works, how the economy works, how the financial system works. And you take a lot of risk when you deposit your dollars at a bank. And so I think that there's a very big advantage here to Bitcoin and the sovereignty it provides.
And thank you. And so, Prath Godboth, again, thank you, as I just thank you before for being here. Ask a question that really kind of pertains to Bitcoin ransoms and something that we're going to see kind of cascade down from the hospitals where there are really hospitals and have the big vulnerability, banks have the big vulnerability, where we're going to see a cascade down to the individual, certainly. And we are seeing a lot of, hacks into that that'll become much more evolved in their own kind of system theory. So they say, if I take Bitcoin at gunpoint, you have no legal recourse to regaining it.
Well, two pieces here. So one is legally you were robbed. So obviously you can go to court, and if you catch the person, then they go to jail or whatever, right? So that there's a legal recourse. But in terms of being able to recoup the actual Bitcoin, the same thing is true of US dollar cash, right? If I'm on the street, somebody puts a gun to my head, takes my $20 and runs away with it, I have no recourse unless I go track them down and get it back. The one difference is, there's a law enforcement official that I know. He says every time somebody commits a crime, we want their hands on a keyboard, right? Which from one perspective is like very scary because the rise of the surveillance state and kind of all the things that we don't like. But the second thing is, if you look at most of the crimes that are committed with Bitcoin, they're actually caught pretty quickly. So Twitter got hacked, remember, and the guy was asking for Bitcoin, and they pretty much found those kids like within, 2 weeks.
Although there was a novelty aspect to that. Rather than kind of a larger conspiracy that just seemed to be kind of an opportunistic type of thing. So I want to keep
for sure. All right, let's go.
Bill Polton, thank you so much for being here. He says, Pop owes me 5 Bitcoin. LOL, just kidding. So we're going to...
Bill owes me 50 Bitcoin. So then, yeah, it's perfect. When that's out to 45.
Oh, so we've become...
Kidding.
So this Periscope now also becomes the people's court. So,
Bill's been giving out some Bitcoin every once in a while. He gives out obviously the cash, but every once in a while he'll give away a Bitcoin.
I know his own approach to philanthropy is different than my own family foundation and what we do, where we're very focused on New York, and we're very focused on social services and affordable housing and vet services and workforce development. So Antonio, and thank you so much for being here. And we were just speaking yesterday. How can one have a stable currency that in itself is a derivative traded asset?
I don't think I understand this. Because you can trade the dollar, right? And any traded asset is just, it's a US dollar over something, right? When you're trading the dollar, same with Bitcoin. It's Bitcoin over the dollar. So I think it's the exact same. It's like saying $1 equals $1, 1 Bitcoin equals 1 Bitcoin, right?
Okay, and thank you very much. And the Mullen Moore, and I'm probably mispronouncing that. It sounds like it has a bit of an inflection. I'm missing it and incapable of expressing. Says, how will miners be compensated in perpetuity with an exponentially decreasing block reward? And if you could keep that kind of again to the big picture.
Yeah. So I talked earlier about kind of the amount of Bitcoin that's created every 10 minutes. That is a financial incentive for people to run the Bitcoin software. And it's basically they get a pro rata share is a very generalized way of describing it. And so at some point, all 21 million Bitcoin will have been given out. Right, is kind of again overgeneralized description, and so what they'll then get is they'll get a share of the transaction volume, right, in terms of the transaction fees. So every miner will just get their share of that. And so the thought process is, in order to get to that point, obviously there will have to be lots of transactions. The price of Bitcoin will have to be very high, and to make that kind of economically sustainable. But I think we're well on the way.
Here's a very interesting question, and again, it's from the emissary. And again, thank you for being here. And we're gonna have to keep it short because we're just running out of time, and there's a lot of questions. And people gave me questions yesterday that I was persistent in asking them for, and they were very thoughtful and obliging. So, emissary asked, "What are the best equities to take advantage of a bull Bitcoin scenario?"
Obviously, not financial advice, but
no, definitely there is no financial advice within this. We're looking at. Everything is directional, no precision.
Yeah, absolutely. Yeah. So GBTC is a ticker that gives you direct exposure. There is a premium. So you've got to go kind of figure out if that's the best thing for you. And then there's other people who are basically buying kind of publicly traded companies that have some sort of exposure. So like Square would be an example. People say, hey, one of their best performing products is this Bitcoin thing. I can kind of get indirect exposure. There's a company called MicroStrategy that took a good portion of their cash balance sheet and converted it to Bitcoin. So in some weird way, that's become like a way to get indirect exposures by holding that company's stock. But really GBTC, I think, is the number one kind of most direct exposure to a Bitcoin today.
Okay. And I'm going to answer this question probably, which is Oisgeld asks, how do you see a Biden win play out in the markets, short-term and longer term? So let me answer that, right?
Let's do it.
Because we do fear the speculative nature in that case of Bitcoin, right? And that's with a capital B in terms of its position one way or the other, right? We look at policy. And so please address the policy side of it. I don't really think too much about a Biden win or a Trump win. I look at the different policies because these things are very complex. And because it's financial, I don't try and reduce complexity to a dichotomy or turn it into a meme. I really don't pay attention to that stuff. One of the reasons we focused on energy for that reason is because, energy has to at some point be figured out and moved and built up capacity. And both Chigurh made that point and so did Mark Schneider. So how do you see a Biden win play out in the markets? I'm bullish no matter what, right? If there's been trillions of dollars printed, then my position is I sit in the bleachers. And if we know they're self-dealing and they're paying themselves, and I'll sit in the bleachers and place my bets on the outcome. So if that's adequate, or is there something that you would like to contribute to that? Because it is kind of a tricky question, because I try not to focus on the politics of things, but rather kind of the instances.
I'm one of these people who is of the belief that most, if not all, politicians are the exact same in the sense of they have to make very grandiose promises, whatever, whichever side of the aisle they come from. But things just aren't that black and white. And so when they get into office, they tend to get stuck in kind of the bureaucracies. And so it's very hard to get things done. And so therefore, just naturally, they don't get, many of the things done that they either wanted to or said they were going to do. And then the second thing is that markets specifically tend to react to what they think somebody's going to do before they actually do it. So right now, if you kind of put the two candidates next to each other, I think the markets heavily favor one over the other in terms of their perception. But that doesn't necessarily mean that's how it plays out. As an investor, you've got to almost understand the psychology of the market, right? In terms of it's not what the candidate does, it's what do people think the candidate's going to do. So I tend to think that like that maybe isn't the way it should be, but that's just the world we live in. And so that's kind of how I look at it.
Yeah, I personally, and without kind of elaborating too much on it, I just look at which spigot's going to be open, which spigot is going to be open, right? And United Healthcare, boomed when the markets were not. We were getting a lot of outsized returns from that. So Guy Mish, and thank you so much for being here. Asks, and I'm gonna kind of remove any appearance of antagonism from it, because you are kind of that evangelist, right? Which is so much appreciated, and such a thoughtful one as well. Is how can Bitcoin become a reserve currency if governments ban it? How can it maintain that status?
So my thought process here is there will definitely be some countries that try to do that. But at the superpower level, it's kind of like you're damned if you do and you're damned if you don't. So it's the ultimate innovator's dilemma, right? Which is the more attention that, let's say, the United States gives Bitcoin from a regulatory environment standpoint, the more legitimacy it gives it. Right. And if they actually go ahead and they do ban ownership in the US, I actually think that Russia, China, other superpowers that want to get off a US dollar system would at least think about, maybe they don't do it, but they would definitely heavily consider adopting it, because then they get off the system. There's a whole bunch of nuance. We don't have time to go into it in there, but I do think that there's this like global game theory playing out, and what it ultimately puts every single person in the seat of, I should not ban it because that is the least destructive thing I can do. Right.
Yeah. And it's interesting. Let me go back to that question so people can see that it's interesting. because there is kind of an evolutionary systems theory to it, which you clearly really do enjoy that part of it, and kind of applying that science of it, because that really does exist, and it's a wonder to behold. Because I'm an old guy, like I said, I would have gray hair if I could, right? Or maybe I'll get a transplant that is gray hair. And we've got a lot more questions. So now I'm going to say, well, we're going to go about 7 more minutes. So
all right, let's do it.
Tim Chessman says, buying and selling because of politics, typically a very bad move. I'm going to respond to that. Very, very true. Very true. Look at the policy and then buy the winners. Look for the outsized. And it reminds me of one of the worst indicators of all, which we all laugh about on Wall Street, or in my old Wall Street days, which was insider buying. Insider buys and sells are good headlines, but they're absolutely meaningless. In fact, they're notoriously wrong, which is the most wondrous thing, because they make headlines and you're like, are you kidding? So I'm going to get to some more lightning. Cynthia, thank you so much for being here as I prepare those lightning questions. Cynthia says, my business, cash is king. Cash has no memory. It does give itself a huge advantage. So Live Monitor asks, and they were thoughtful enough to ask yesterday in anticipation of this. You stated, and unfortunately people aren't going to be able to see it, so I'll try and make it very clear. You stated Bitcoin was the next reserve currency. However, no issuer, the global reserve currency, has ever allowed it to be undermined without a fight. How would Bitcoin combat multiple governments banning its transmission and conversion within their financial systems? And there's a follow-up question to that as well.
All right. This is my favorite part about Bitcoin to talk about, which is every single transition of a global reserve currency has been the result of direct, violent combat. 2 countries have gone at it. One country ends up being the winner. That country then implements their currency as the global reserve currency. This happened time and again throughout history. That is in the analog world, where the most powerful country is the one that has the most powerful offensive military. Right? I can come to your country. I can conquer you. If I kill all of your people, then I am, the best. In the cyber world, that's not necessarily true. In fact, actually, the best defense means you're the most powerful in the cyber world. And so today, the Bitcoin network is the strongest computing network in the world. It withstands the most amount of cyber activity in terms of it's never been hacked, none of that stuff. And so there is a world where in this digital first or cyber first world, Bitcoin ends up kind of ascending to that global reserve status, never firing a bomb, a bullet, etc. Not because that is not the way that currencies transition. Just in a cyber world, it has the strongest defense. So no matter how much countries attack it, it can withstand those attacks. That's theoretical, but that's the framework.
It's a very interesting response because their counter adversary really is something to behold, isn't it? So and the speed of their counter is also amazing, and could certainly challenge any nation. So there's a follow-up question that they have, and that is Bitcoin would have to multiply its market cap by 10,000 to cover all the dollar liabilities when including derivatives. Who would decide the policies, and how would Bitcoin prevent hyperinflation from occurring? And they include within that if it was to be the reserve currency.
So yes, rather than do the dollar liabilities, what I would say is it's about a 40x, give or take, from Bitcoin's current market cap to gold's market cap. It's about a 400x to the global money supply, right? If you start getting into dollar liabilities and kind of all this other stuff, there's a lot of funky math, I think, that people will all debate. So let's just stick with the actual currencies themselves, or the money. And so I believe that Bitcoin's going to surpass gold's market cap by the end of this decade. So by 2030, I think that'll happen, kind of 40x in price from here, from market cap basis. And then in terms of the global money supply from a size standpoint, one of the big questions is how much of a zero-sum game is this, right? So do you have to have other currencies fail for Bitcoin to thrive? Or can you actually have coexistence, right? Can it grow in size, become the largest, and other things don't necessarily suffer as much? One of the most interesting arguments that I've heard, so this is not something I came up with, but I just really like it, is every single currency that is inflationary, you're financially incentivized to get out of the currency. So to consume or to invest to protect your wealth, right? Because the inflation eats away at the cash. And so in a world where a currency is deflationary like Bitcoin, you're actually incentivized to hold the currency. So you don't consume, you don't invest, you just hold it. Now there's pros and cons to that, but what that would mean if that ended up becoming the global reserve currency is that Bitcoin would steal market share from other store of value assets. So real estate, art, precious metals, whatever, people would not be incentivized to get out of the currency into real estate, for example, right? You would just simply hold the currency.
I'm going to move on, and it's a follow-up question, so thank you very much. Interesting question and really interesting reply. So Chance, and unfortunately we're not going to be able to see him to see his question, asks, what are the most likely responses in the crypto sector during a significant housing market correction or in a significant recession? And what are the leading indicators that Bitcoin would respond to?
I don't know so much if Bitcoin and, let's say, housing is like interrelated as much as Bitcoin and housing. There's an argument to be made that Bitcoin and housing both would act as inflation hedge assets in the current macro environment. So they're not necessarily responding because of each other. They're more both moving in the same direction or have high correlation because of the macro environment, all the quantitative easing, et cetera. So I tend to look at right now in the environment we're in, whether inflation actually occurs or not. People fear inflation. They run for inflation hedge assets. You're going to see real estate, precious metals, and things like Bitcoin do well, just out of the fear. The question is always like, how long does that last? So if you go back, from 2008, when gold goes down 30%, government steps in, prints a bunch of money. Everyone fears inflation. They run to gold. Gold goes up 200%, hits an all-time high. But then eventually it kind of comes back down to reality, if you will, because the inflation never came and people kind of went back into other assets. So we'll see what happens.
Gotcha. And thank you for that. And Monique Francis, and I hope I'm pronouncing that name right. So my apologies if I'm not. Question is, and again, people won't be able to see this. So if you could take note of it. Question for Friday. Many folks like to think of Bitcoin as a form of digital gold. In practice, however, it's often correlated to stock market movements. Why is that?
Yeah, so for sure in the short term, meaning most recently, it has moved with the S&P, deflationary environment or kind of a liquidity crisis type environment. All asset correlations go towards one. Over a long period of time, so take the last 5 years, for example, the correlation of Bitcoin to traditional assets is much closer to like 0.15, which is much lower than most assets. So it's historically been a non-correlated or a low correlation asset, but definitely since basically March, when there started to be a lot of money printing and things, the correlation has been much closer to a high correlation. But that's for every asset, gold included.
Okay, and we're down to like the last few minutes. So it's a question that I had asked before, and they're asking it. So perhaps there's an abbreviated way of responding to it. In 5 years, will baby boomers versus Gen X hold more Bitcoin than millennials and Gen Z? And I'm an old guy, so I'm not good with these descriptions of them. So if you could help me understand that a little bit better. They asked in 5 years, will baby boomers and Gen X hold more Bitcoin than millennials, Gen Z?
On a percentage of net worth, millennials won't be topped, like millennials and younger. On an aggregate dollar amount, there is an argument to be made that the older generation, just because they have more wealth. So if every baby boomer goes and buys 1% of their net worth and millennials and lower buy 10%, the baby boomer generation just has much more money. And therefore, on an aggregate dollar amount, they could hold more Bitcoin. But on a percentage of portfolio, I don't foresee, the millennials and younger being surpassed. Okay. I mean, I know people who have like incredible amount of crypto as part of their portfolio.
Okay, so we're going to get down to the last questions, and hopefully we should be over in about 5 minutes. So Ms. Belf asks the views on tokenization. This one everyone can see. Ms. Belf asks the views on tokenization. Will it still happen? And can you, because it's a term so frequently heard, could you just give the 30-word explainer of that?
Tokenization is every asset used to be physical paper analog. So physical mortgage, physical stock certificate, et cetera. Today, most of them are represented in the financial system as electronic CUSIPs. So it's a random string of letters and numbers that represent the physical asset. The idea of tokenization is just they all will take that paper and become tokens that are traded around the world, can be held, etc. I absolutely believe that every stock, bond, currency, commodity will be tokenized in the future. It's going to take longer than I think I initially thought, but we see a lot of really, really interesting kind of headway being made there. The question is, rather than it being on the equity side, actually where we're seeing a lot of it happen is on the debt side. And so kind of what are the other asset classes that it will kind of take hold in? What's the timeline? That's all up for debate.
It's been 1 hour and 19 minutes. So you broke all the records and you were just awesome. And I so much appreciate the time you've given us and you've given everybody. You've just been wonderfully informative, really wonderfully informative. And I definitely recognize the laboratory days of Bitcoin, again, with a capital B. So it's that whole kind of conceptual framework have seemed to have endured and perhaps even passed all the tests. So
we'll see.
Well, it does seem to, right? I mean, it had a trend which was a bit self-fulfilling, and that can be a very dangerous thing. And it corrected from there, and it invited regulation and invited a lot more cautiousness. And I think it now is also kind of converted, at least philosophically, right? A lot of finance historians who have been very critical of it and who never expected it to even make it to $10 and $50 and thought of it more as kind of a trivial buy a coffee with it novelty. And that includes even when Fred Wilson came out with famous venture capitalist came out with his recommendation, everyone should get it and even buy a coffee with it. And that might have given it the authority and the kind of permission that people wanted. And that was like 10 years ago. Wasn't that like 10 years ago? Fred Wilson came out with his buy a coffee with it.
Yeah, it may have been a little bit like eight or nine, but yeah, so sometime. I mean, Bitcoin's only 11 years old, right? So it was at some point in the last 11 years.
Yeah. I got into, and I'm going to close up, and then I'm going to give you an opportunity to close up. So I'm going to close up with saying that I became very interested in Bitcoin after my days with some peer-to-peer music file sharing services that I was very involved in, not as a consumer of them, but I really enjoyed the technology of it, right? And I enjoyed the way that files could be distributed, and I was very involved with Kazaa. And it was kind of disgraceful the way legislation cracked that down because they couldn't handle technology. So it just shows you kind of the deficiencies when the market understands something and the legislators don't. It can be a very dangerous thing because then they ended it. And so I was very interested in and after peer-to-peer became torrent and then became BitTorrent, and then you had the innovations that now led to the current environment we're in, and it's been exciting to see. So my days of it were really tied to when I was an anti-status, and I just wanted to bring, even though I was in the system, I was one of them that saw that it was kind of eroding and wanted to contribute in my own kind of youthful ways. So with that, and again, now as I've disclosed, I have no investments, and I'm not trying to encourage or persuade, but we're looking at investor series where we're looking at different assets and different allocations and sector rotations and what comes next in this changing, defragmented world. Things are going to be different. And there will be wars. And does that mean that, Bitcoin and other types of way of exchanging medium will now be used more aggressively? So with that, you made, and I subscribe to your newsletter. It's wonderful. So you made an announcement today that I would like to kind of you to explain a little bit, because it's very exciting and it's kind of your own evolution as these things go. And if you could just give a very top level view of it, it would be really appreciated.
Yeah. So basically, I think the world is going through a great transition. It's moving from a institutional heavy world to an individualistic world. And that basically opens up the opportunity for something that's been labeled solo capitalist, right? It's people building kind of on their own name rather than institutional names. And AngelList recently had a pretty big innovation, I think, which is these kind of frictionless solo GP fund structures. So I announced today that I started one, and people can go and they can check it out and kind of see my track record and strategy and all that. And if they want to invest, they can invest. If not, no problem. But what I think is kind of happening from more kind of structural standpoint, venture capital is these fund structures are going to put legacy institutions into the classic innovator's dilemma standpoint or position, which is it's basically entering the market in a much more flexible, more advantageous position for LPs. It's going after an LP base that those large incumbents traditionally don't work with. And then as people build kind of their personal brand or their business behind their personal brand, it will allow them to kind of expand both horizontally and vertically to kind of eat the rest of the business. And so we've seen this obviously with, everyone from the Netflixes to the Ubers and taxis, et cetera. But really what's held this back previously is just the ability to scale a business like this. There wasn't the software available. And so, we'll see how it goes. Obviously, I'm excited. I think that there's a number of people who are kind of participating in this that are, I generally think are very smart and they're excited. But there's still a lot of work ahead. So we'll see how it plays out.
Yeah, it is exciting. And we were discussing it a bit before. I'm excited for you. And it's good that you've now moved beyond the proof of concept to really execution and operational excellence is as a business guy and as an exec that spent a career having to obsess and worry about these things, it's exciting for me to see something kind of mature within its life cycle, and I would include your concept and your futurism within that. So, congratulations!
Thank you so much, sir. I appreciate you doing this. These are awesome. As I said, I've watched other ones, and please keep doing them.
Yeah. Thank you so much. And everybody, thank you so much for joining us. And I know that there's questions I couldn't be responsive to and I couldn't introduce to Pomp. And there were so many. And we had to keep it to a lightning round. So my apologies to those. Please don't feel you were neglected. I saw them. I just had to scroll through so many. And thank you once again to everybody. I hope you've enjoyed this. I'm looking forward to next week. And next week will be kind of your equivalency, right? Which is Luke Roman, who will be discussing gold. So while as Bitcoin kind of retains its memory, and that's one of its features, right? Is gold doesn't. So one goes in the wallet and the other one goes in your backyard. So I'm excited about that. So again, I want to thank everybody. We ran a little bit over time, so thank you everybody for enduring with us, and I hope it was informative, and I hope everybody has a wonderful day.
Awesome. Thank you guys so much.
Thank you, everybody. Have a great day. Bye-bye.